Hello, welcome to another ES Futures Trading video stream. Today is Friday, August 11th. It is 8:30. PPI just came out. Has just come out. This is the reaction of the market to PPI. Market, I don't know where it was, but it's trying to take the lows. A little soft response. Okay, this is a spike here. All right, we have a spike to the downside today. Like a gap. The overnight has taken this low, yesterday's low. We have the 50 right there. This low, yesterday low. The thing about yesterday is that we have this 2 days balance. 2 day balance. The high was questionable, low was questionable as well. Was very close to the 50 yesterday. I mean before yesterday, and the market look above, not just look above the 2 day range, but look above this inside bar. Okay, the market was coming from a gap, from two gaps, no, 2 days, my bad, no gaps, but 2 days where that had the first day have an upper distribution and then a lower distribution, and both distributions were closed in or during the trading session, and when that happened, the market is looking for more information, right? And what happened yesterday, it took this range out, this inside bar out, and then fall back into it, and not just into this inside bar, but into the 2 day range. When the market came back inside this day, that was an opportunity here. I started looking immediately to the opposite side of the range. It doesn't mean it's going to happen, right? It doesn't mean that it's going to travel to the opposite side of the range, but the odds are there. And that's why I ask. Okay, that's why I ask, what were your thoughts? Your thoughts. What is this? I remember I post I tweet something about it yesterday. You know what? You know what? Not. Let me see if I can find it. Okay, oh, here it is. All right. Now I put this tweet yesterday. I didn't have my charts yesterday. No, the market came back inside the 2 day range here, and that's why I started to see. This is 2 days. This is one day. This is another day. This chart is without the overnight. I started to see the opposite side, of this day. My question is, what are your thoughts here? Okay. Now we have a spike. Now we have a gap. It's still early, very early in the period. And what happened yesterday? I am still inside in yesterday's. one of the first things I have noticed when the market opens is the high volume the market had at the opening. Really high volume at the opening. Relative, I know why I say high or low. It is always relative to something. Okay, there is something there that I need to compare to. In this case, was to not just to the previous day, but pretty much, almost, yeah, actually the last 10 days. Higher than the biggest volume uh, in the last 10 days. It was higher from the beginning. This is when I started to compare to this, not to yesterday, but to the previous day as well. And notice how here it's about the same. It was even lower than the previous. Here is when I start, okay, volume start to catch up. And you can see the difference. There's a steep increase of volume in these periods. From here, it was in this after E, A, B, C, D, E, yeah, in F. Notice how the volume increases in F. Right. And from here, it just keep going higher. What happened in F? A, B, C, D, E, F. This is when the market takes this low. My bad. It comes back inside the monthly, inside the 4-week range, the monthly range. You will wonder what is that. Let me show you here again. And this is why it's very important to keep an eye also in all what's happening in the market in all time frames. This is when it comes back inside this range, this monthly range, and inside this 4-week range. And I consider this important. There's a big storm here in Atlanta and Roswell. I may lose connection here because sometimes I just lose power here. I may lose connection. When I have this kind of days, I am very careful to trade when I trade also. I'd rather not trade because I don't know. I may lose power. And can you imagine being in a position and not being connected? Okay. And the market comes back inside this range. In F, can you see this 4-week range, which is this month here? And it is important to me because the market has, after the market formed this breakout in this range in the weekly, it just has a breakout, and that is what I associated this movement to, coming back inside this range, and that's why I have this market here. What I'm trying to do is trying to understand what the market is doing. Okay, because if I see just price, it's follow me price. I guess I showed the last time. The best example or the best analogy that I could do is, okay, there's something here. Okay, it happens that I have this one. Oh, before I go to that, notice there's a spike now to the downside. Yesterday we had a spike to the upside. Now we have a spike to the downside. But notice where this high is. Last. Exactly to last. A couple times I came back to the exact same point, exact same level. Wide overnight POC, and this level is also this pullback. This late pullback here, this rally high is this is something that I'm going to carry on. I'm going to be try to remember all day long today. Okay, I want to see the market opens with a gap to the downside. I'm going back to the analogy that I was going to do. Notice the difference, for example. Okay, this is a professional game, soccer. When these players Okay. Okay, how can I say this? How well they cover the field. You know, they have defensives, they have defensive players. You can see there's a bunch of players here, but there are another ones that are covering. You know, if this is a defensive, if Sweden is playing defensive here, what these guys are doing here, right? Or what these two guys are doing here. They are not just focusing on the ball, which in this case would be Price. Notice how how they open the field here. I don't know what's going on here, but if I compare this, you know, the juveniles or kids, you will see the difference. Playing soccer, you will see the difference when kids play soccer. They will just guard. You know, when the ball is, for example, right, oh, they this is funny. All them following the ball, right? All them. I can't avoid to look at this guy. This is funny. I cannot avoid look at this guy. I guess these are too young, but you got the idea, right? The ball is price. Everybody, and that happens too often in trading, and especially to retail trade. Oh, the light is flickering here. What happened is, you know, traders just follow price. They're always following price. Most of them are following price. Now, what are you looking now, for example? Can you imagine what traders are doing here? The market has this big break here. If I'm going to take a look, what most retail trade was this, when I call retail is small trading, right? Very short time frame trading. Traders. Where's the ES here? Here is the ES. Most of them use this kind of charts, the 5-minute chart. They will not look what's here in the back. And they will have also, they will have charts that will look like this. And not just that, they will have more things. I saved this thing. They will have moving averages, scholastic, RSI, what I don't know, what the Bollinger Bands. I don't know what the heck is this. And I saved these studies here just to give an example, just to have an example of what people usually do. They are so focused on where the market open, where the market has closed, where this bar is closed, what the last 20 bars are doing, what the last 10 bars are doing, you know, and you are just so focused. Using this kind of chart is it's like driving. When you drive, it's like driving just looking over the hood. And you know that driving, if you look just over the hood while you're driving, it is really dangerous because you actually miss, right? You may miss so many things that happen in the road because you are just looking so close. Even if I do the 30 minutes, it is just so crazy here. There's so many things. This is what I used to do. Right? This is what I used to do. It is so many things that we think we have the misconception that there's a lot of things here that I'm not going to miss anything. But it's just so confusing here. There are just so many things. At the end, I understood that the simpler the better. This is the best thing I could do. Okay? This is the best thing. well settled, for example. This is what the market is doing here. I have the overnight, and once I have this overnight, once the market has opened, what I can do is I use, instead of having the overnight here to make things simple, what I do, for example, if I don't have market profile, this is the range of the overnight here. This is just a Fibonacci. You can see this is Fibonacci, where I remove all the things that are in between, and just leave the start, the finish, or the 100% and 50%, and that's it. Because that's the only thing I am interested in. Where is the high, where is the low, and where is the center, and how the market trades in around these levels. Center of the range, lower of the range, high of the range. Nothing else. Right? Sometimes there is some, like for example, there could be, I don't see nothing now. The last 10 days at least, when the market here, it almost here, there's something very important here, for example, because I can see a distribution here. This is the overnight. Distribution here at the low. What the market does with this distribution, it closes here. It joins these two distributions. That's the only thing that can find of use, something useful for the daily, or in front of the daily, or in front of the opening, for example. Nothing else. What happened yesterday, for example? What is this? I'm going to remove this one. This is the current. This is going to be, for example, I have this for the upcoming session, and this another fib here to have the high here. Yesterday's high, yesterday's low, and halfback right here. This one is not of use anymore. This one doesn't matter. Something that I am going to put here is the 50 moving average, which is 44.80. No, 45. It goes 74. I believe. 74. 44.74. I'm going to call this 50 SMA on the right. Okay, how much it is? It is 74, right? And notice where this level is right where the market is trading right now. Right there. Where settle is, we have settled, for example, today at 44.8575. $85.75 was last $86.75. It's about the same. It's the same. $86.75. Okay. This is yesterday's low. This happens to be. The gap has been closed here. Come on, how big is this? Okay. This is not gap closed now. This is, what is this? Yesterday's low. 810 low. 810 low. And this is 810 high. Eighteen high, 18 low. Now, this 50, why I have two 50s here? I am observing this. Huh? The reason why I have two 50s is I have this. Come on. I'm going to go to the daily, okay? Daily chart. Look at where this 50 is. 68. But this is a ES. You know, DS, this is an average contract. What would have this chart have in consideration? This is a continuous chart. You can see that we have trading here all year long, right? This is the average chart. While the U23 is the current contract. You can see that there is really almost nothing here. It started, this contract started to trade, I believe, here. You still have a lot of volume here. It opened here. It is right. Oh, by the way, it's right where it opened. Right where it opened. Right now, it's right there. Okay, that's the 50 is different than here. It's, come on, 74 here. On the average contract, $68, and that's why I have this here, 68. As I say, I don't use this reference to trade, but if I see the market, for example, stopping at that, okay, that will mean that there is something there. Yeah? Somebody's watching that. Somebody's watching that level, right? Or somebody's using that level. The easier the market is used is to read, or the more respected the reference is, the higher the odds that who is trading there is just small or very short time frame traders. Okay, we got a spike to the downside today. Yesterday, traders took the market high. We have spiked to the downside. Nothing happened to the outside. The market closed below. Okay, now we have it right. Now we are going to the out. I know if the market is not going to the upside, then it's going to the downside, right? Of course, and that's the way home traders think. What I focus now. Okay, this is I would say this is a prominent point overnight POC. I'm going to put it there. It's about zero. It's the same. There, you can see that there is a lot of shorts here. There is a lot of shorts here coming from last, or zero, which happens to be POC also. This having downside extensions from yesterday. Remember, from yesterday, I have this. Oh, by the way, I didn't open because I got the stream, but all right. I didn't open the Restream app to see if there is anybody that asks. Sometimes because sometimes people ask questions, I answer too late. I have somebody yesterday that was asking, wanted a direct message me. I have opened the direct messages, so you can send me a message anytime. And also, as I say, I have this Twitter account where I put sometimes I guess I am using this a little bit more often now. This is my trader account, ES Futures Trading or E-mini SP 500. You want to reply something or ask something, you can do it here as well. And where the market is right now. There is no change in the monthly. The monthly has it is an inside value in the monthly. We are just in almost we are finishing the second week of the month. We still have 3 more to go. Not even half of the month. This is an inside bar that has almost the range of the previous range. Or the previous bar. The market has re-entered this range in the weekly. It's a little bit more organized in the weekly. The daily is kind of crazy. The monthly time frame is always the last time frame that is going to reflect change. We may have a lot of things going on back and forth on the daily, sometimes in the weekly as well. But as long as the market, as long as the monthly, for example, which in this case is trending higher, as long as this month doesn't take this low, this is still an upside trend, right? This is a trend to the upside. I'm not saying it's going to go to the upside. This is what's happening right now. We never know what's going to happen, right? I understand that this high has no excess relative, to this high. Here, this is March last year. Notice where this market has been sold from, exactly from this high, about the same. I have this highlighted because if the market re-enters this range, it could reach some serious. This could be some movement here. In the same way as we are having a lot of trading in the daily around this 4,500. Notice how many times the market has traded through this level. The more it trades through the level, the weaker it becomes. Now, what's happening here? What can happen if the market comes back to this range, to the high this range? There's nothing here, right? You will see there's nothing here. But look what is behind. There could be something here. And if this level is taken, the good of the market can play to the opposite side. And notice is also how in the same way how this has no excess relative to this month, we have the same thing here below. We have the same thing here. That's the monthly. Okay, that's the monthly. But who trades in the monthly versus or relative to who trades the weekly, or who trades the daily, or who trades the intraday? If you have a monthly time frame for your trading, are you going to trade the monthly, or are you an investor who is more likely to be using a monthly time frame? For example, right? Who is the bigger the time frame? I think the bigger the capital as well. So the bigger the odds these are going to stay. Now, the weekly, we can see this X, there's no excess here. Okay? There's no excess here in this day. And this week high, I don't use this trend. I have put it here because I couldn't avoid to notice that these lows here were matching lows, and I can fit a trend line just like that. I don't pay too much attention. What I pay attention to is this range here, this 4-day range. This market has re-entered this trading range. Now we have a trend to the downside in the weekly. It was trending higher, 1, 2, 3, 4 weeks trending higher, and now it's trending to the downside. You have 2 weeks in a row trading to the downside. The week hasn't closed yet. This is, kind of see, there's a lot of trading around this level, the 4,500. Notice these lows here, 1, 2, 3 lows, very close together. Very clear, very clean time frame. Now the daily, this is where the craziness starts. Exactly to this high, 33, 31 here, 33 here, just a couple points of difference here. It was sold from that reference. There's a very mechanical reference, very mechanical level. Notice how many gaps the market have on the lower side. How many times the market has been bought from the 50. I was bought a 50 here, 50 here, 50 here. Every time the market gets close to the 50, it was bought. And it's going to do the same thing again. Right? We're at the 50, the market is going to be bought from this. Surely it will be. Okay, it was bought before, now it's going to be bought again. When you find yourself thinking that way, be aware, because you are getting, the biases are taking over when we start thinking that way. Just we start seeing that something will happen just because something happened before. That's a very, very risky way to think. Notice how we have 1, 2, 3 lows here together. This gap here, how many lows? 1, 2, 3, 4 lows gathered there. Firecracker effect potential here, another gap here, another. I don't consider this a gap because this is the beginning of the contract. When the contract roll over, when this is the beginning of the current contract, September contract, and when this chart was updated, that's when you have this gap. Not because the market opened with a gap, just the chart, they updated the chart. Because if you see, for example, let's check this, the current contract. There's no gap here. Can you see? Uh-oh. Okay. There's a lot going on here around this level, around the 4,500. How many times the market has re-entered this range? Boom, has been bought. Market's trying to buy from the 4,500, but every time it's getting lower and lower and lower and lower. Now it's being bought. Traders are used to buy the dips now, again. Habits die hard. I'm not saying it's going to buy. Notice how this market has a 4-day range. We have something very curious here. This is a 7-day range here, from here to here. We have a gap on this side. We have a 4-day range here at the high, and another 4-day range here at the low. 3-day, 4-day, my bad. And I can close. Maybe I can just, if I want to isolate this thing. What I see from here, now I'm going to check the market profile. Right? Can you see what I'm doing? Every time I'm zooming in. Every time I'm zooming in a little bit more. Now market profile. All of these shorts here have been removed. This could be something. This can be something. We never know what's happening, okay? We are going to know what happened just after the fact. Before that, the only thing we can do is speculate. We have really high volume yesterday. The last time the market has high volume was here. Okay, and there was a breakout to the downside of this inside bar. Shorts. And this day, which is yesterday, took all of these shorts out. And these shorts were replaced for another shorts. Remember, I am speculating here. I'm not saying that's happened, okay? Because we never know what happened until just after the fact, okay? Because if I know what's happening, you know what I'm going to do, right? If I know they are selling, I'm going to sell. I'm going to up from the movement. And nobody wants to do that. Bigger time frame traders go to extreme lengths to hide their activity. And that's why when a market is easy to read, it's very likely that it is just short time frame traders. Ask yourself, if somebody who is big wants me to see what they are doing, okay, I ask what could be the reason that somebody is going to let me see what they are doing. Okay, so this could be bigger traders being replaced. What I used to observe is we have this kind of big volume, this big accumulation of volume like happened this day, and this is more usual. And a day, a very narrow range, and a market trending, doing some kind of movement. In this case, was going to the upside. You know, look at this, what happened. All of these longs here were removed. You know? But what happened in this day is we have this very, very obvious trend to the upside. We talk about that as well. High volume here, very wide POC, and then the breakout fall. Okay, we don't have that today or yesterday. We have narrow profile, a lot of selling that happened yesterday. And why you say a lot of selling? Because POC moved lower. POC was here higher at the beginning of the session, and now it's down here. We never know that the market is going to keep selling. Right? Just because it sold yesterday, it doesn't mean it's going to sell today. Right? And that's why I say that the business, I used to say, and I like this saying, right? The business is an uncertainty, and nobody likes uncertainty. When you try to explain that to people that is not in trading, what the business is here, how can you do something when you don't know what's going to happen? Okay, and I have, for example, my son that's very enthusiastic. When he used to live with me, time after time, he used to come to me because we have AI now. You can use AI to trade, to know what it's going to do, what the market will do. I have this indicator that is going to work. This is it. And the thing is, nobody knows what's going to happen. And that's using the premise, and that's the premise, this indicator that all the indicators use. They assume the market is or has no uncertainty. To use a formula, because all of these indicators use a formula to calculate the value. RSI use a formula. Escolatis use a formula. I don't know other. That's the only indicator I remember. But if I'm going to look for something, look at the amount of the studies that there are there. Crossover, cycle, daily studies, daily Elliott. Can you see how many are there? Hundreds. Look at this. Licenses from F. Look at this. My God. Hundreds. And what all these use? Let's put one here, just for the sake. Lowest. I don't know what is this. Yeah, money flow. I don't know what the heck is this. But to calculate each point in this graphic, a formula is used. And to use a formula, you are assuming that you know what's going to happen. That's what mathematics are. And mathematics is a science. There is exactness. There is exactness in mathematics. And markets are anything but exactness. There's no certainty here in the markets. But humans love certainty. We hate uncertainty. Markets hate uncertainty. But that's what they are. That's what the business is here. Uncertainty. And that is what actually gives us an opportunity. because if there was something certain here, we just had no chance. Just my, people or bigger companies with huge amount of capital can just, hire scientists and create a formula and just use it, you know, copyright the formula or whatever indicator they come with, and use that to trade. And we just have no chance here. Look at this, for example, here. How things change. The market has been bought from 50. I give more weight to this 50 than to this 50, and to the fact that this low is right at the 50. I am just observing this. This is what the market does around this. This is not my something that I am going to paying attention here, because I am always doing adjustments as well, because market change. If I keep doing the same thing that I did a couple months ago, my odds are really, lower than a couple months ago, because it's very rare that the market remains the same. The markets are always changing. Now, what I have now is this distribution here. First, there's a gap to the downside. Market is closed here yesterday, and now it's a gap as of 9/11. Okay, and the next thing is from yesterday. Look at where the market closed yesterday, right? Where the saddle is here. The saddle is here, right? I can use this one as well. This is a saddle for window trader, but this is the saddle of the Chicago Mercantile Exchange here. This is the market. This is the official number here. Look at where it was yesterday. It's just right there. After all of this movement, after all of this volatility that we have yesterday, this craziness, market going to the upside, then breaking, where the market ended? Right where it closed the previous day. Right where it closed the previous day. So nothing changed relative to the previous day. Nothing has changed. What was happening the previous day is the next question I ask myself. What was happening the previous day? The market was coming from a breakout of this inside bar. Breakout to the downside and close it here. What we had yesterday, now we're having an overnight inventory that is balanced, because we have good amount of trading above the seller and like a good amount of trading in the lower side as well. We have longs and we have shorts, and POC is right. I mean, a seller is kind of like right at the center. It's balanced, okay? What's the volume on the overnight? 250, a little bit low, not that low, but a little bit low. Something that has appeared here is we have a spike to the downside. Again, the hardest times I had before is when the market opens inside the spike. Because that's neutral. Opening below the spike down here, that's negative for the market. In this case, it will be negative. Opening above the spike is positive, because market is rejecting lower prices, right? If this was an upside spike as was yesterday, opening upside is accepting, the market is accepting the higher prices. Remember, yesterday also the market opened inside the spike. Hardest times for me. I understand that. I acknowledge that as well. In the same way as I observe the market, I also observe myself. Right? As much as this market understanding, there's a lot of self-understanding in this business. I would say more important than market understanding is self-understanding here. And then we have a strategy. All I am saying here is the concepts that I have learned from Jim Dalton. This is nothing new. If you want to learn, the funny thing here is that all this information is public. Right? All this information is public. You have Jim Dalton's updates. He does these updates on over the weekend, and he has. I have no relationship with him. Other than I was his student. He was my mentor, a really good one. I am just um, you know giving credit. Well, credit is due. All right, and he has webinars, public webinars actually. Every public webinar that he has had in the last couple of years are here. You can see 10 webinars here, and there's 16 pages like this, over 160 webinars here, each one lasting 30, somewhere within 30, 45, 60 minutes. And all that I have learned is here. All right, he has these courses that are coming. He sells something. You can see that's not cheap, but they're very good. All right, but it's public. I can say you don't need this, but because everything that he teaches is here, he doesn't hide anything. But people don't like that. People want something easier. People want to have let's say trading futures. Trading futures. Okay. Look at this. Easy step guide. How many views? 40,000 views. In how many days? In 14 days. 14,000 views, for example. This is me. Okay? I do this to not, as I say, I do this. This is another business, okay? Streaming is another business. You know? Introduction to futures. 40,000 views. How to do $200 in 2 minutes. 6,000, 40,000. You know? And people want things easy. People love the easy things. People don't want to know how to understand market. People want to hear somebody buy here, sell here. You know? It is curious how people won't, for example, assume that if I can play basketball, I can buy basketball shoes or football shoes. I have a uniform. I have a ball, a football ball, a soccer ball, a basketball ball, that doesn't make me a professional. If I use a suit, doesn't make me I give a suitcase and a suit, that doesn't make me a lawyer. Or I use a white apron, that doesn't make me a doctor, right? I'm not going to expect to go to the gym and one day, and at the end of the day, after 30 minutes of exercise, I don't expect to come out looking like Arnold Schwarzenegger. But somehow, people think that just because I can open a trading account, just because I can have a charting platform, I'm going to make a lot of money trading. The success rate in trading is very low. And that's the reason behind that. That's the human thing. We are just humans. If I do what the success rate in trading, many people don't like to hear that, but success rate in trading is less than 5%. The failure is 95%, and I've been generous on that because it's more than that. And usually that remaining percent, that little tiny percent that is successful 1 year is not the other year. We don't want to learn. This is a career. This is a business. If you are a businessman or businesswoman, you understand that the business requires a lot of time, a lot of dedication. Yeah. But tell that to people, right? And the thing is, if we do, that's not the thing that I understand. I think I understand because of my failures, right? I saw that happening. If I'm going to do what 95% or more of the people is doing, how can I expect a different outcome if I am doing what they are doing? How how silly is that? Okay, coming back to the market. Hey, Kidder, I'm glad, man. I'm glad you passed. I'm sorry I didn't see you. Just this is what happened. I don't, I don't see. I don't. I am. I guess I focus too much in the market, and I don't see the the chat that often. Well, I'm glad, man. I'm glad you passed your exam, your FINRA NFA exam, the Series 3 exam. Thank you, man. I'm very glad you did it. Thanks for coming. And you say this is for you will be able to be an financial advisor. I guess that's what you say. I'm glad for you, brother. Okay, I'm glad for you. All right, coming back to the market. What I have here, what I'm seeing here, two things, right? I can see this. There is a gap to the downside, which is my focus. This will be the market. We are just 2 minutes, not 2 minutes, a couple, like 8 minutes. This low is weak. Questionable market opening down here actually repairs this. I expect some selling or buying around this level. The 4,500 is not that far. We are back inside the 4-week range. And the reason why I check volume this much is because the ES is an index. You know, it's an index of 500 companies. And I cannot check just one company. Well, I cannot check just Apple, Tesla, or the big five. This is the whole market. Yeah. And if you want something even more specific, I just check this one, the current day relative to the previous day. But if you want a number, Jim Dalton actually has that in his website. As I say this multiple times. I have, you can see here the number, right? How much higher than yesterday? 17%. You can see how it decreases, right? And then it picks up again when it's going to the downside. All right. I guess as I say, my focus is the gap. What happened with the gap? What the market is going to do. Overnight inventory is pretty. I think it's pretty much balanced. Has been it's in balance. This is not short, not long. It's getting a little bit short here. I have a gap, and if this market closes the gap, one thing can happen here. Failing to close the gap, that's a good opportunity to go short. But closing the gap, that changes everything. That changes everything. The next thing I will see is this distribution here. If the market can close the distributions, that will be monitoring for continuation, because getting back inside previous day range actually targets the opposite side. But what this can be after this big increase in volume yesterday. I'm not saying nothing here. I just those are just pieces of information there. Pieces of information. You never know when something is going to be useful. This high, okay, this high also, if the market comes back inside, closes this distribution, it targets the opposite side of the range. It targets this high, but first it has to deal with this overnight. First it needs to take this high, then get out of the 4-month range, then take the 4,500, and then just after that, huge buying needs to come. I don't know. I cannot read the future. But this is something that, if the market comes inside this distribution, this is something here. And remember this mechanical high here at, look at where that, come on, man, 4,500 is. That's 4,150. It's just right there. It's 4,500. And what else? The lower side, we have this 4-day range. This is most of these single prints have been taken out in the overnight. You have the basal spike of this spike. This is way too back. It's not important. I guess we are going to see here is this value area high. This one. Value area high, half back, POC. A lot of volume here in this 4-day range here. Coming back inside this range targets the opposite side, this range, and there is, multiple references here. All right, 2 minutes, 2-3 minutes to. I'm going to take a quick break and come back. Oh, I wish you a good trading day, actually. All right, I will see you later today. I hope I can make a market update. See you later. Stay safe and good luck. Bye bye.